Early exchange, shaping policy, advancing development.
What a way to start the show this morning, and that's to give you a picture of what will be the thrust of our conversation today. Welcome and glad you have joined us on that program that sets the pace for your day, that program that gives you the sense of direction when it comes to issues related to business, finance, and the economy. Always my pleasure to be your host, and I am Femi Ayodele. So today, we're going to revisit the decision made by the CBN MPC as regards the benchmark interest rate. The CBN, in its wisdom, decided to increase it to 27.25%, by 50 basis points. We're going to look at the implication of this on the economy. As expected by some people, that perhaps this would be a time for CBN to cut interest rate, but in its wisdom, unanimously decided to increase the benchmark interest rate. Like on Wednesday, we always do a special series on sustainable development goal. We also do something different apart from the outcome of the MPC meeting to look at climate change financing, as there has been committed by developed nations to commit the sum of $100 billion to developing nations in order for them to be able to meet up with climate change goals. But what has been the level of commitment to this fund is going to be part of our conversation today. Don't forget, you can be part of this conversation. All you just have to do is to join us on all our social media platforms, Facebook, X. Just search for @Souk News TV. There you find all the details. All right, we'll go on a short break now. When we return, we'll look at our big story for today, which is the result or the outcome of the MPC meeting, and then the implication of that on the economy for Nigeria and what all the business community need to know as regards this development. That will take place after this timeout. Stay with us.
Early exchange, shaping policy, advancing development.
Glad to know you're still there with us. This is Early Exchange, where we shape policy and advance development with our conversation. Like I said earlier, our big story for today is to look at the outcome of the MPC meeting that was held by the CBN committee yesterday, where in its wisdom, the CBN decided to raise the benchmark interest rate by 50 basis points to 27.25%. I want to look at the outcome of that. For those who have been expecting the CBN to cut rate, I hope you're not disappointed. But like what the CBN governor said, it was a unanimous decision on the part of the committee to ensure that Nigeria repositions its economy, and we're looking at the impact of that. Joining us in the business of shaping policy in this regard, we have Sam Orovwuje, who is a public affairs expert. Glad to have you join us this morning.
Good morning, Femi. My pleasure to be here.
Good morning. Good to see you again.
Thank you.
Yeah. So let's start. There were expectations before now. Yesterday we were looking at what might likely play out. Even a few weeks ago, when this news broke out, the MPC meeting is going to hold. Several permutations were happening. People were speculating, okay, it's time for the CBN to increase. It's time for the CBN to maintain the same rate. It's time for the CBN to reduce the rate, given the fact that the inflation figure recorded in August and all that. Were you surprised at the decision of the CBN to raise benchmark interest rate to 27.25%?
Personally, I'm not surprised. If you look at the trajectory in the last 1 year of the central bank leadership under Olayemi Kaduso, the most recent that was held in July, there was a raise in the benchmark interest rate. So I'm not surprised. If you look at the indices and the elements within the economy in the last 1 year, I was not expecting that the rates would be reduced, in my personal view. So I'm not surprised that there was a 500-point raise from 26.75% to 27.25%, which is a bit marginal increase in terms of interest rate, but not too surprising. But then some of the initiative in the last 6 months and thereabout, if you look at the National Bureau of Statistics, the rate of food inflation has gone down to some extent. Even the headline inflation as well has reduced. So if you look at it from that perspective, some of the intervention of the Monetary Policy Committee of the CBN may be producing some results gradually, but maybe towards the end of the year, when they meet sometime in November or thereabouts, maybe the expectations will be different. But for now, within the element of that decision making of this 11 member that was present at that committee meeting and the press release by the governor of the CBN, some of those decisions were far-reaching. Maybe as we progress, we'll look at the implications in terms of liquidity ratio, cash reserve ratios, price of commodities, and some elements within the monetary policy corridor or window which the central bank uses in making monetary decisions in respect of the monetary policy rate that just been raised recently.
Now, before we look at the implication, let's look at the trend globally. You could observe that, given the example given by the U.S. Federal Reserve, the Fed last week decided to cut interest rate. And when the decision to cut interest rate is made, is informed by when you have appreciable progress when it comes to the inflation figure, and that weren't you expecting the CBN to also look at the fact that if given the figure released in August showing that the inflation figure is experiencing a decrease, don't you think
a marginal
decrease? Don't you
so the
think it's
percentage
also
is so marginal?
yeah, it's so marginal, but don't you think it's also in the spirit of, you know, the fact that if that is something to go by, you understand, if you claim, okay, the inflation figure is dropping, isn't there an opportunity to consider cutting interest rates like some have done? You have the US, UK, Canada, and the rest of them.
But if you look at the distortion in the economy, particularly the foreign exchange market, we've been struggling in that regard, even where you have a market that has been unified to some extent. If you look at those rates, it's still challenging, particularly for manufacturing. So maybe sometime in November, if we can have another marginal decrease in terms of headline inflation, food inflation, maybe the level of insecurity has been worked upon by the government. Maybe November, we might look at a situation where there might be a marginal cut in the interest rate. But in the wisdom of the CBN, what they have done, I think, is in line with the economic reality of Nigeria. So it's within their mandate to put a policy framework to control monetary policy in terms of price stability, terms of interest rate, and some other challenge that has to do with money supply in the market.
Now, let's go to the implication of these now. Each time the CBN decides to increase benchmark interest rates, the implication to that is it increases the cost of borrowing. And for investors, when you have the benchmark interest rate at 27.25%, they'll somehow be discouraged to engage in borrowing and all that. What may be the impact of that on businesses? Because we agree that, okay, for Nigeria to get better at the Nigerian economy, we need to improve the level of our local production. For these manufacturers, these producers, to improve local production, they need funds. And here you have the benchmark interest rate at 27.25%. Will that not discourage them further?
Well, while we look forward to a single-digit interest rate, particularly for manufacturing, we're not there yet. So what is important is to clear the distortion in the economy. So what it is that if the banks are getting it at 27.25%, then there are minimum threshold at which the banks can give out credit. So within that purview, the banks will continue to give out money because they are in the business of giving out credit. So if they don't give out credit to a very large extent, they cannot be in business. So they will make some adjustments, and those who will look for credit will borrow within the window or the ceiling that the central bank has provided. But it's a challenge for for those who are borrowing to do business. It's a challenge for those who are lending money because if you look at the 5 major elements in terms of lending principle, once those elements, then the ability for the bank to be able to realize is credits that are likely to fail if those given to business and those businesses are not doing well. That becomes another problem in terms of secularization of those loan portfolios where you're not able to realize your credit as at when due. And because people put deposits in your bank and those deposits are supposed to return on demand. So when there's a disconnect between the borrower and the lender, then generally the economy suffer for it. But the bank will find a creative mechanism to lend in spite of those rates. But there are other opportunities where the cash reserve ratio, the liquidity reserve ratios, those windows, I think they are positive. To that extent, they can leverage on those other windows to be able to borrow to and lend to the public.
Now, this conversation will be incomplete if you don't look at the implication on an average consumer, in terms of the prices of goods and services. And for those who are servicing loans, via student loans, mortgage loans, and the rest of that, how will this impact their interest?
Normally, when there's a gap, the disposable income, which is the purchasing power that consumers have to go to the market to consume certain items. So if the income is not there, certain elements cannot happen. So the purchasing power cannot buy certain elements in the market. Then manufacturing and those who are producing items for the market will equally suffer. So we have to find a way to strike a balance between these ratios or interest rate in a way that it does not jeopardize the general economy. But then this is done to stabilize money supply, which is within the purview or the mandate of the central bank to do regularly.
Now, let's look at the issue of inflation, which is largely influenced by food inflation in Nigeria. And you're aware of the issue of insecurity, which has prevented some farmers from accessing their farms. Now, for those who argue that tackling inflation in Nigeria is beyond just tightening the economy, given the examples that we have in the last few months, what are other things that you think the CBN should also focus on to complement on the gain, achieved by tightening up the economy, like the issue of food inflation, exchange rate, and also the cost of production? So I wanted to speak to these 3 areas: the food inflation, the exchange rate. The CBN has decided to float the naira, and here we had the implication. Also talk about the addressing local production as well.
Femi, simply put, what is the challenge here, even beyond the CBN, is productivity. Once you cannot energize productivity, then this challenge that we'll talk about. So therefore, what is important, the other windows beyond the CBN, there are core other lending sector that the government is trying to use to reflate the economy. So more education should be given where manufacturers, particularly small and medium enterprises, can take advantage of those other incentives so that we can enhance productivity. Once productivity is enhanced, then the issue of inflation naturally will come down. So our major challenge is inflation, then insecurity on the one part, making people not having the capacity to go to farm, to become productive in terms of getting food supply to the market. On the other hand, our penchant for foreign goods is equally a challenge, and that's why the foreign exchange market has become a major problem in terms of providing economic growth and development for the country. So we need to look inward and let's see how we consume home or Nigerian-made goods so that we can shore up our foreign reserve for certain things that are critical to the economy. That's essential. Then on the other hand, the government must equally show some leadership in terms of responsibility in the way they spend government money in an opaque manner that does not energize trust in the public space. So once we're able to connect all these dots, then we get to a level where the level of inflation will reduce dramatically. Then the CBN is able to stabilize the interest rate, and the monetary policy regime will improve and to be good for the common good or the public good.
All right. I guess we just have to leave the conversation here. Let's hope with this decision, the economy will get better, and let's see the outcome in a few weeks and even in months. Perhaps the next figure released by the Nigeria Bureau of Statistics would justify the decision and the implication of this decision made by the CBN. We must thank you, Sam Orovwuje, for your time and your thoughts on this development. Thank you so much for always being there for us.
Thank you. My pleasure.
Early exchange, shaping policy, advancing development.